So overall, a little bit of uncertainty, but some stability coming ahead, and we'll see what goes on and in the next month. And we also have good news with lower inflation through rent.
Hoy cow, happy day after Fed Day, everyone. John Paul, Realtor, your go-to agent for the Central Colorado Front Range. Yesterday, the Federal Reserve announced a 0.25% rate cut to help steady the economy and ease inflation. But before anyone celebrates, mortgage rates haven't really budged. Fed Chair Jerome Powell also said another cut in December is not a foregone conclusion. And with the government shutdown limiting key data, the Fed is driving through fog. Think of it like driving through fog. You slow down, stay alert, and wait for clear visibility. To dig deeper into what this means for mortgage rates and loan programs, I've invited Stephen with Spire Financial to share his take. Stephen, take it away.
Yes, like John Paul mentioned, the Fed rate cut does not directly affect the mortgage interest rates, but the mortgage interest rates reflect the overall economy. So the Fed rate cut plays a big part of that. Okay, so when the Fed rate cuts, they usually means that mortgage rates will also go down. But mortgage rates are more directly tied to the 10-year Treasury yield market. So we follow that trend, and I'll show you that chart in a little bit. So basically, when the 10-year Treasury goes down, mortgage rates typically go down. When the 10-year Treasury goes up, mortgage rates go up. We saw good news coming from the Fed, but just like we saw in September, because of the way that the announcement of the news was given, it had sort of a negative or balancing effect. Typically, what happens is banks are going to front load their savings when it comes to anticipations. Like in September, we anticipated the Fed to say we're going to announce a 0.25% rate cut. So interest rates start going down. And then yesterday is when the Fed implemented that rate cut. So that should have taken control, or that should have taken hold and been another good piece. So I'll show you what that looks like on our 10-year Treasury yield chart. Okay, so here's the screen share. So back here in September, you could see before that, in anticipation, red is good. Red means interest rates go down, 10-year Treasury yield goes down. We had anticipated the 0.25% rate cut announcement. But this little green here is where Jerome Powell was making the actual announcement. And while he was speaking, that was going up and up and up. And the reason that was because the way of which he was saying he was doing it. He was saying he's not very confident in the economy. So we're doing this 0.25% rate cut as sort of a stopgap. That had a kind of negative effect. But the market recovered and interest rates started going down. We had these big chunks where we're going down. And this is where we were yesterday. We were looking pretty good until, again, the implemented rate cut happened. But again, while we were speaking and saying that there was dissent and we're not too sure what's going to go on, the market reacted negatively. So interest rates started going up a little bit. And then this little bit here is today, and we're starting to see it start to come back down from the overreaction, which is good. Okay, so that's what's going on with the markets there. So I'm going to stop sharing this and then show you guys. So that basically is what is going on with the Fed announcement and the Fed rate cut. When they implemented the rate cut yesterday, again, because of how it was mentioned, had that negative effect. And also, we are now on day 30 of the government shutdown. What that means is Jerome Powell is not getting the collected data that he needs. And he's worried that if the government doesn't open up and they don't give him those new numbers, the new collected data for the December 10th meeting, then he will not, if he doesn't have the data, he said he will not do that other 0.25% interest rate cuts again. So we'll see where that is. We're looking for a stabilization in the market and then interest rates. So that's good. And the other good news is that we are seeing rental prices come down. So rent prices going down generally is a good indicator that inflation is coming down, which means that things are heading in the way that the Fed wants it to. So overall, a little bit of uncertainty, but some stability coming ahead, and we'll see what goes on and in the next month. And we also have good news with lower inflation through rent. All right, so that's where we are with the market as of yesterday. with the Fed rate cut.
Thank you, Stephen. And so what I gather from your expertise and my research is that for here in the Central Colorado Front Range is that for buyers, focus on affordability and monthly payments. For sellers, steady rate, keep buyer activity and home values healthy. Reach out to Stephen or me to start your new beginning in a new home. Bottom line, this move supports stability, not a shakeup. Mortgage rates still follow the bond market inflation more than the Fed itself. When you know, you know.